What's going on, everybody? Welcome back to part 6 of the Advanced Fundamental Analysis series that I've been conducting over the past several weeks. I apologize, I took a week off last week. Had a lot of things going on, so I didn't get to really prioritize creating these videos, so I do apologize for that. But let's jump right into it. Keeping with Apple as our case study of sorts, we're going to talk about some ratios dealing with the company's assets or types of assets. So, as we know, companies have um, current assets and then they have non current assets. So, this one kind of goes into a bit of both of them in that the fixed asset uh, turnover ratio deals with those non-current assets being what's listed here. You can go on a company's balance sheet and see that breakdown. But you have, properties, land, buildings, machinery, office equipment, furniture, stuff like that are considered fixed assets. So you can find that under the PPE, property, plant, and equipment section of the balance sheet under the non-current assets section. And then we'll get into the total asset turnover ratio. So the fixed asset turnover ratio just gives you an idea of the efficiency with which the company uses those fixed assets to generate sales. And the formula is a bit more complicated than can be a bit more complicated than most of the other ratios that we've discussed in the past. But basically, so the fixed asset turnover ratio, you take the company's net sales. Now, don't confuse net sales with net income because those are not the same things. So your net sales is your top line, and then your net income is the bottom line. So top line meaning, for one, it's top line of the income statement. Um, and also meaning that it hasn't accounted for any of the company's expenses yet. So net sales, um, think of that as your net revenue, really. So you take your net sales and you divide that by net PPE. Luckily, Morningstar calculates net PPE for you, um, and so that's just this line item here. Um, Calculating net PPE can be a little tricky, but basically you take the current year's PPE uh, and total PPE, that is, and you subtract that by the previous year's PPE, and then you want to add that depreciation number in there, uh, and then that gives you your total net PPE. So, moving on, net sales divided by net PPE gives you your fixed asset turnover ratio. And although I calculated that number, mine is a bit different from what Morningstar calculated. I believe Morningstar has like 6.61 or something like that. Let's see, where are my ratios? Operating performance. Okay. All right. Okay, so fixed asset turnover ratio. Um, let's see, for 2019, 6.61. I kept getting 6.96, so not super duper far off, but I'm not sure what exactly Morningstar is factoring into the formula. So we'll just roll with that, anywhere from 6.61 to 6.96. And uh, I use two separate sources for my calculations as well. Um, so yeah, um, and also in keeping with the uh, the guidance given with the other ratios, you do want to compare those ratios to, or the fixed asset turnover ratio to uh, competitors to know, okay, where exactly does this stand? Because saying, fixed asset turnover ratio is 6.61 or 6.96 for Apple, oh, that's great, that's terrible. You don't really know until you stack it up with its competitors. All right, so let's go into the total asset turnover ratio. Very simple calculation. Again, you'll need the income statement and the balance sheet to do this. So, like the fixed asset turnover ratio, you take the net sales and divide it by the total assets that the company has. And then that'll give you what the total asset turnover ratio is. So basically, that tells you, what the company has. Uh, the company uses its entire arsenal to generate sales. How efficient is management at doing so? And that gives you that's what that total asset turnover ratio tells you. So, like I said, net sales is equivalent to net revenue, and you divide that by, on your balance sheet, you have your total assets. Uh, so your total assets are going to include both your current and your non-current. So don't make the mistake of uh, trying to separate the two, because it'll be incorrect. You won't come up with the correct number. Okay. Okay, so your total assets right here, this line item. So your total assets are going to be your current plus your non-current, like I said. And you want to divide that by your total. Uh, you want to divide that into your net sales. So usually your total asset turnover ratio is not going to be a big number, generally speaking. Um, because a lot of these companies have lots and lots and lots of assets at its disposal. So let's take a look at Apple's total asset turnover. So for the same period, 2019, 0.74. So again, compare that with competitors, see how its competitors' total asset turnover stacks up, and that'll give you an idea of where Apple ranks in the standings. Um, but yeah, so that's pretty much it. I believe we've covered um, most of those efficiency ratios. I think next video we'll round it out with receivables and payables ratios, and then we'll move forward in our series as well. We'll get away from those turnover ratios, and we'll get into things like leverage and all that good stuff. So thanks for watching. If you guys have any questions or comments, definitely leave them in the video below, in the comment section below the video, and I'm happy to field any questions that you may have. Thanks again for watching.